Hi, I am Anna. I come from www.ntvforex.com. U.S. President Trump signed executive order to provide additional coronavirus relief analysis. http ntvforex.com News ID FFC34A 8/10/2026 17:48 a.m. The U.S. July payroll data on Friday was better than expected, but a finer look suggests that most of the jobs added have been low-paying and in the services sector. Job growth in the manufacturing sector was tepid. Nevertheless, we did see some U.S. dollar strength post the data. NBSP After talks between Democrats and Republicans failed to seal the second stimulus package, President Trump treaded the executive order route to extend unemployment benefits. He also signed executive orders to defer employee portion of payroll taxes, student loan repayments and rent-amp mortgage obligations. The unemployment benefits have been trimmed to $400 per week from $600. There are also several riders attached which would make a lot of people ineligible for the aid. The stimulus is much smaller than what the markets were anticipating and pricing in, and we may therefore see some disappointment. Unemployment benefits were seen as being crucial to support household spending and in facilitating the economic recovery process, which is still in its nascent stage. U.S. Paycheck Protection Program, under which small businesses were granted forgivable loans or loans at concessional rates too, has ended. It is said to have helped avoid pandemic-related job losses by around 5 million. If demand does not pick up and if the loans are not renewed, we may see a fresh round of layoffs. US and China are set to hold a semi-annual review of the Phase 1 trade deal this week, which was agreed upon on February 15. Under the deal, China was to step up purchases of agricultural, manufactured goods and energy and services from the US. China's purchases so far have been well below the committed levels, and this would not go down well with the U.S. administration. Also, diplomatic tensions between the two sides continue to escalate. President Trump imposed sanctions on Hong Kong Chief Executive Carrie Lam over the weekend, in response to implementation of national security law in Hong Kong by China, which is seen as compromising the autonomy of Hong Kong. Hong Kong and Beijing have strongly criticized the move. Axis and HDFC Bank QIP-related inflows are likely to hit the markets this week. This would cap upside in USD. 75.50 is likely to act as a strong resistance. We expect the RBI to continue absorbing inflows through nationalized banks and continue with its strategy of reserve accumulation. 74.50 continue to act as a solid support. Break of 74.50 could trigger stop losses and lead to a swift move lower. Until then, 74.50-75.50 continues to remain the range for USD. Sentiment in the bond market has taken a hit after RBI left the policy rates unchanged. The RBI board is to meet on August 14 to decide on the surplus transfer to the government. Bond markets would take further cues from the dividend number that is announced. Among Asian currencies, Indonesian rupiah and Korean won are trading weaker against the USD. USD pair is likely to trade 74.85-75.15 range intraday. NBSP strategy: exporters are advised to cover through risk reversal strategy. Importers are advised to hold with a stop loss of 75.40. The 3M range for USD is 73.60-75.90 and the 6M range is 73.00-77.00. Download the full daily currency insight. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.